But let's shift focus to Tata Technologies. Reported a steady Q4. The EBITDA margins expanded. Profits after tax slipped by 27% because of higher taxes and lower other income. We have Warren Kevin Harris, who's the Chief Executive Officer and Managing Director of Tata Technologies. Mr. Harris, thanks a lot for joining in and appreciate your time here on the channel. You know, I wanted to talk a little bit about the growth, right? X of VinFast, your revenue growth has been about 10.5% in Q4 and 30% in the full year. What can you guide for in terms of growth in FY25, both with VinFast and without?
Well, good morning, and thanks for the opportunity to join you again. And you know, we were very pleased with the full year results last year, and certainly the momentum that we maintained through Q4. You know, we're very excited about the opportunity that we've got in FY25. You know, there will be a slight overhang from the runoff that we've seen at VinFast that will continue in Q1, but the full year we are very bullish. And despite some of the guidance that our peer group companies have provided in terms of the full year tapering somewhat, we don't see evidence of that. Demand continues to be very strong, and we continue to convert a significant number of the large deals that we have in our pipeline. So we're very confident about the year that we've just entered.
So do you have any numbers that you can share with us in FY25? What are you guiding for in terms of growth?
We don't provide specific guidance. All I can say is that the momentum that we established last year has continued. We continue to position that we expect to meet or exceed the growth expectations for the full market.
So you may not, sorry, the reason I'm asking you repeatedly is because, we are seeing some signs of a slowdown, especially in pockets like electric vehicles, which is passenger vehicles, right? I mean, if you look at Tesla, they've sort of cut down their guidance. There's a large amount of their workforce that they've laid off. So are you looking at some slowdown because of these, cautious pockets?
No, I think somewhat counterintuitively, the ER&D cycle, the investment in new product, does not align specifically with the volatility that we sometimes see in terms of consumer demand and unit sales. So companies are investing today in support of their competitive position in 3 or 4 years from now. So we've not seen the impact of the slowdown in the EV growth that is being positioned for markets like the United States. And one of the things that I always remind everybody is that despite the rhetoric that's coming from some companies, the expectation this year is that the EV sales will grow from 14 million units last year to somewhere close to 16.7 to 16.9 million units this year. So although growth is tapering, the transition to alternative propulsion systems continues as expected.
All right. Hi, Warren. Good morning and good to see you, Ben. I wanted the outlook on the technology solution segment because that is a smaller part of your business, but it grew at more than 20%. I think around 23% to be precise. Could you tell us, can it continue to grow at more than 20%? And that's only for that segment. And overall for the company, are there levers in place to improve margins for the coming fiscal?
As far as technology solutions are concerned, we were very pleased with the performance of specifically the education division within that part of our organization. The public sector education proposition that we built here in India continues to grow in a very pleasing way. The central proposition that we represent in that area is the work that we're doing with state governments in and around the deployment of innovation centers for the ITIs. One of the things that we're actually doing is deploying our e-learning platform, I Get It. We are educating students in terms of how to develop concept through the production launch of an electric vehicle. We're partnering with Tata Motors, and we're taking electric vehicles. We're cutting those electric vehicles into sections, and we're able to show the student how the digital product is developed, and also compare and contrast that with the physical manifestation of the product. That approach has been successfully deployed at states like Karnataka, and we've won business over the last 12 months with Tamil Nadu, with Assam, with UP, and the order book continues to grow. So we expect the growth that we enjoyed last year to continue, not just this year, but we have an order book that gives us confidence in terms of our prospects over the next 2 to 3 years.
Okay. So just to expand on this further, what are the kind of tie-ups perhaps that your investors and stakeholders can look forward to? Because you've been announcing several of them, right? There was one with Airbus, there's been one with BMW. I mean, what part of the business do you think will drive the growth that you're alluding to?
Well, I think if we look at the different industry sectors that we support, our primary focus is automotive. That represented over 85% of our services mix next year. Much of the growth and the tailwinds that we're seeing there relates to the transition from internal combustion engines to electric vehicles, and the investment that's been made in software-defined vehicles and connected capabilities. We expect that transformation to play out over the next 10 to 15 years, and so the growth that we've seen over the last couple of years, we expect to continue. And one of the things that we're very proud of is the work that we've done for both traditional OEMs and new energy vehicle companies. And one of the things that's unique about Tata Technologies is the end-to-end capabilities that we have. We still believe that we're the only engineering services organization in the Indian private sector that has developed a complete electric vehicle. And that reputation is affording us the opportunity to build partnerships such as we've recently announced with BMW. We'll be standing up a joint venture here in India with BMW that will be focused upon automotive software and also the development of digital technologies that will help BMW optimize the way in which they run their global operations in the future. So automotive continues to be very strong for us. We're also very bullish about aerospace. Just to give you some numbers, there's about 23,000 aircraft in productive use today. In the next 15 years, that's expected to almost double. And so the likes of Boeing and Airbus can't produce enough aircraft at the moment to satisfy the demand. And so we are very much providing services and capability to accelerate manufacturing throughput within those organizations. And we're also partnering with the group companies, Tata Group companies. As you know, the Tata Group has made a very big investment in aerospace with the acquisition of Air India. It's also invested in capabilities in and around what TASL does, and we're partnering with both of those organizations. So those tailwinds are certainly reinforcing the confidence that we've had in that sector.
So, Mr. Harris, coming back and sort of to wind up with the big picture view, right now, the services part of your business is about 77% of the revenue, right? Technology is about 23%. How do you see this mix evolving over the course of the current year, FY25? And I'm just trying to understand which business typically perhaps fetches you better profits and better margins. And you're at, I think, just about $600 million in revenue, 618 at the end of 24. Slightly longer term roadmap. When do we see Tata Tech hitting $1 billion in revenue?
Well, in terms of our expectations for this year, the split in terms of mix will continue to be about 80-20. The services business is the center of gravity as far as our value proposition is concerned, and as I've referenced before, we continue to be relatively optimistic in terms of our prospects, not just this year, but in the future. But we are addressing through technology solutions a very challenging part of what it's going to take for the manufacturing sector to evolve, which is the development of new skills. And so the investments that we're making in the public sector here in India, we expect to inform content and capability that will reinforce the work that we're doing with many of our customers in the private sector as a complement to what we're doing in services. So we're expecting both of the businesses to grow at about the same rate next year, and we certainly are expecting to continue that as we move into follow-on years. As far as margins are concerned, services continues to provide a much more generous operating margin than tech solutions. But the convergence of our of the business mix is providing again the confidence that we'll continue to improve margins as we move forward.
All right, Warren, thanks a lot for joining in. Wishing you all the best for the coming fiscal. Next time around, we'll try to pull you on some numbers. Till then, wish you well and look forward to chatting up with you. For the time being,